Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Anthony Grisanti, CNBC contributor and the star of Futures Now, and also, I should say, president of GRZ Energy. Anthony, great to have you here again.
Mike, thanks for having me once again.
Now, I know you're over there in the pits, on the NYMEX, on the floor, and I always love to have you here just to get your, ideas and pick your brain about what's going on and what is going on now in the energy market. Specifically, I want to talk about crude oil, which has been moving up to highs that we haven't seen now in, since about...
2011.
2 years.
Yeah, right, exactly 2 years. I mean, last year we hung pretty much below the $100 handle, and really it started with the stronger equities market when we started hitting the highs right there. Crude oil is used as an investment tool, I always say, and if you track it against the S&P, you can see that. And then really the nail in the coffin, or the thing that really spiked it, was the problems in Egypt that happened last week, with traders and market participants being afraid that there was going to be some disruption in supplies coming through the Suez Canal.
All right, but it kind of sounds like the main driver, and it's interesting you started your whole explanation off there with it's tracking equities.
And it definitely has. There's no doubt about that. As the economy has slowly improved, I'm not going to say it's great, or it's nowhere near it was in 2006 and 7, crude oil is traded higher, and demand has picked up a bit, but we are nowhere near the levels we were, say, 5-6 years ago. And I put out a newsletter, and I put in the newsletter that, does this justify a $10 spike over the last 2 weeks? And I said, no, it does not.
Okay, because if you look at inventories, it would seem Absolutely. What you're saying is correct. I mean, we're not far from a record high in inventories in crude oil. Gasoline, I guess, would be, you'd have a little bit more of a bullish argument there.
Absolutely.
And also what we hear about almost on a daily basis is all this new production in the United States where we're going to be self-sufficient, energy independent, yet the price is moving higher. It has to be a little disconcerting to consumers, right? I mean, especially if they hear you say, people are buying it because the stock market is going up. Just Absolutely. Buy the stock market then.
Absolutely. And, but it is what it is. And, Mike, I mean, let's be honest. If crude oil was trading $140 a barrel, but yet gasoline was $3 a gallon, nobody would care about the price of crude oil. So it really boils down to the price of gasoline. And I actually do see some relief coming very soon. We have 3 more weeks to the driving season, roughly. It looks like we're going to have enough supply to meet demand, and demand hasn't gone above 9 million. We were talking about this earlier, and in 06 and 07 with gasoline demand, it was over 9 million barrels a day every day. In the last 2 years, we've only hit that spot once, and that was over the July 4th weekend, and that was kind of the last gas that you've seen at the pump, and I think you're going to see prices start to alleviate now.
And what is this pullback in demand attributable to? Does it have to do with just changing driving patterns, a weaker economy, now the advent of more electric vehicles, all of the above?
Exactly. You hit the nail right on 3 different heads, all of the above. The fuel efficiency of vehicles on the road has increased 17% in 5 years alone, and yet the average car on the road is still 11 years old. So all these cars are being replaced by infinitely more efficient cars. Demand is still not back to where it was, and a lot of that's due to, we have an unemployment rate that's still 7.5%. There's still a lot of Americans out of work. Certainly a lot of people have turned to public transportation or other modes than driving a car if they can save a few dollars here and there, because let's face it, our economy is not where it was 4 years ago, and people are still watching their pennies.
True. Now, what does this say for the long term? I mean, because it kind of seems like you have two diametrically opposed forces here. On the one hand, we're talking about conservation, more discoveries, more supply, alternate forms of energy, electric vehicles, etc. But on the other hand, you still have that argument about depletion of, crude oil, places like the North Sea and other areas that were highly productive now sort of winding down. What's going to win out?
Well, I think conservation wins out at the end, and I'll tell you why. OPEC has plenty of oil out there. We're finding more in this country every day, and the alternatives, I think, will take over the market before we get to a point where there's not enough crude oil to go around. So I think that seeing gasoline at $4, and you'll see it higher because of inflation, number one, but seeing it at $4, $4.25 will be the kind of a rarity. It won't be the norm. And I think you'll see.
You mean it'll be low? It'll be higher or lower?
No, I think it'll be lower than that. Okay. I think when you see it go above $4, that's an aberration. That's not really the way the market should be priced. I see gas, say for the next few years, roughly $3.25 to $3.75 a gallon.
Well, I kind of trade it at the pump, so to speak, because I feel it when it gets up that high, I put less
there you go.
in my gas tank, and when it goes down, I tend to fill up.
It's like any commodity.
Yeah.
You know, when the price gets too high, demand falls, and it's the same thing with gasoline.
Yeah. Now, how much has the last year's Superstorm Sandy played into, at least regionally here in the Northeast, in terms of gasoline prices?
You know, we still haven't recovered from that, and it shows that we have a lot of problems with not as far as the gasoline supplies in this area, but the distribution of gasoline in this area. And by that, I mean that there's not enough refining capacity in the Northeast on these shores to meet all the demand of gasoline. We have to either truck in, barge in, or pipeline in 40% of the gas we use. So if you have another storm like that and that's disrupted, you're going to see prices spike for that reason alone, and no other reason. I mean, there was plenty of gas, it just couldn't get to the stations.
Now, as an investor, if an investor wants to get exposure to the energy sector, oil's still a good place in your opinion, and how do you go about doing it?
I think probably for the simplest way would be the ETFs at this point. I still think oil's a very good play because, you know, it's a very range-bound market right now, and I think that we're probably getting to the lower end of the range, believe it or not. I think we do stay elevated above $100 for the foreseeable future. Probably in the fourth quarter, you'll see prices come off because that's where demand is, but I think probably the EFT is the easiest way to play.
Now, we haven't spoken about natural gas.
No, we haven't.
I'd like to ask you what your outlook is there.
Very bright future for natural gas. The prices have been depressed all summer long. We haven't gotten anywhere near the demand that we did last year because of the heat wave. And the problem with prices this year is that you're comparing it to last year's prices. So every week we expect an injection that would be a bullish figure, and it's turning out to be a bearish figure because we're just not injecting as much into the system as we were, say, last year at this time, because last year was a lot hotter. But as far as it goes, that will be the main driver of this economy going forward with natural gas. There's a lot of conversions going on. Coal plants into natural gas.
What about as a transportation fuel? I know you hear a lot about municipal fleets and this kind of thing.
That's where you'll see it, and that's probably where either that or trucking fleets, and that's probably the end. I don't see a huge amount of use every day in automobiles for everyday driving. I just don't see that happening because you can't put the terminals everywhere. And natural gas, as you know, is a gas. It's hard to liquefy it, and really once you can liquefy it, that's where it's easily transportable. But right now, there's no easy way to do that.
All right. Looks like there's still a lot going on in the energy sector. Anthony, thank you very much. As always, a pleasure having you here.
Great to be here, Mike.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.